conversation with the pioneer of technical analysis in India, only on ET Now.
Which is, let's say, a high momentum market on the downside. So we should actually look to build a position across a range of prices, not at a price. So I would say start from about 5,050. I think you have a price gap left long time in the back at about 5018. So I expect those gaps actually function pretty well when you trade down into them. Below that, you have another gap at about 4965 to 4980. Now, those numbers might sound a little scary, but it's not necessary that the market has to actually trade down into them. I know there are people who are actually calling for even more dire levels, but I think I would take it slowly because of this thing that I mentioned, that we are at maybe 3 HD levels already. So I would expect that there will be a cool-off, there will be a small rally, and if those levels are to be seen, I think we will visit them later, not immediately. So I say 5,050 down to somewhere around 5,020 is where I would expect the market would slow down, try to find its feet again and try for an upside rally. But then the upside rally, like all of us agree, would be something of a slightly muted affair, not far too much on the upside. So I think at the most sort of optimistic level, I would put it at 5,300.
All right, Dr. C.K. Narayan, thanks very much for joining in on that discussion on the markets. But we've been talking